and we say, yeah, that will be the template going forward. But you know what? If you want something different, we can make that happen. How do we then ensure that all of our development companies are treated equitably, I guess? To me, you have a policy, everybody's on the same playing field. Or is this a situation where we have a template, the city manager makes a determination, and you've basically set a precedent, and then the template is changed for everybody going forward? How do you see that playing out?
Well, I know there's certain situations, let's say an HOA or something like that's introduced, and we don't have that in our standard template. So we can at least put things like that in there, or add in clauses like that for unique situations on an ongoing basis. And then there's a potential for changing the whole template at some point, but that has to have approval through the development community. And it's not just one developer at that time. If the template changes, it has to have buy-in from UDI. Every developer has to be in agreement with that. But I do see it as a potential for certain situations where there's a unique, maybe unique aspect of that development that might necessitate a small minor change in the actual template.
Okay. How would you define minor then? Like what I'm trying to understand is the threshold whereby a request for a change is made and it's significant, and council would in fact like to have a voice into the decision. But once we make this change, there's no requirement for council to have any input anymore. So I'm just wondering what is minor versus major, and how do you define that?
Yeah, it's a tough one to define. So right now, the way it's stated, if we had to change a punctuation mark, we have to bring it back to council. So that's where the difficulty lies. Right. But with most of the major changes, those are things are going to get approved through ASP and other avenues. So this document's more just the legal formality of the agreement itself and what they're going to be giving to us as part of the development that's going on. So it's hard to define that and what would be a minor versus a major, but I'm sure that if there was something major enough, it wouldn't be caught at the development agreement stage. It would be caught well before then, and would have.
Okay, fair enough. That's a responsible answer. Maybe through to our CAO then. Mr. Scoble, are you comfortable with this change then to your administrative policy?
Sorry. Yes, I am. I mean, you know, one example used there was a homeowner association, right? An HOA. You know, some of the developers are interested in that arrangement, whereas some aren't. So right there's that flexibility that, you know, the base template doesn't include that, but if a particular developer wants to have an HOA, we can readily kind of amend or addend, I guess an addendum almost more than anything, add that into the development agreement. Right?
Okay, fair enough. Those are my questions, Madam Chair.
Thank you, Councillor Broadhead. Very good questions, and you asked some of mine, so I'm going to move it over to Councillor Mackay. Councillor Mackay, your hand is up. I see it.
I've tried to unmute a couple of times. I apologize. So can you hear me now?
We can.
Yeah, if you read lips, you would have heard my question. Anyways, I was just congratulating Councillor Broadhead. I thought those were fantastic questions, and he did ask several of mine as well. I guess just picking up on some of the responses, Jonathan, so you're part of, I guess one of the risks would be as if there was a rush by development companies to actually want to convert their lines of credit over to surety bonds. Do we have a large number of companies that are development companies that have their cash tied up in deposits, or would it be just a few? What's the risk there?
So I'm just opening my sheet up right now. So right now, for letters of credit that we have over the value of $50,000, we have 86 of them on file right now. So the way I've set it up is to be around between 15 to 20 is my breakdown. So once the first group of them have been cleared off, or the people have indicated they're willing to switch it, then we'd switch to the next lower dollar amount so that it's not bombarded, and we would have a reasonable amount of time to deal with these.
So what was the number you were looking at? Maybe like, I mean, in a sense, so would it be a specific number you would have that would be converted, or would that be your benchmark?
Yeah, so in total, all of them over 50,000 we'd give the option for, but it starts off at 500,000, which there's 17 of that are over 500,000 right now.
So that's significant though. So, I mean, you could, that was going to be my next question would be, what would, like, I mean, I'm obviously not familiar with security bond providers, and I don't know what premiums would be, but so what would be is that just primarily the benefit of it is that they just don't have to, they can acquire the bond, and so they don't have to carry the whole entire line of like the whole cash cost. So they don't have to put down $500,000. It would actually be a portion of that, and the surety company would actually pick that up. Is there a large premium in that? Yeah, go ahead, sorry.
From the surety companies, they've indicated it's actually less expensive going with them than it is going with the bank fees for actually getting the letter of credit. So it actually works out in double benefit to the developer, because it'll be cheaper for them to obtain the development bond cost-wise, and then their money isn't tied up at the same time. But realizing that's only for the higher level developers, they can get the rating of the A-.
So and I appreciate, that was one of my questions I was going to ask, because I mean, certainly there must be only a few security bond providers that can carry large sums of money like that. So they would have to be a high rating. Would we have a limit in relation to how much it would be, or would it be just limitless? Like, let's say somebody wanted to put one of those 17 that have 500,000, maybe there's a couple that are couple of the development companies that are actually, there's more than, like, they have 2 or 3 of those 500,000. Would we just put a limit on there to protect our risk a little bit?
I don't think that it would be a necessity, just because the way that the development bond is written up, it would be a separate one for each individual situation. And we wouldn't be able to transfer from one project to another the money that we have to collect off of those. So they're kind of isolated per project. So it wouldn't make any benefit to holding one and releasing others.
Yeah, and that's kind of where I was kind of answering or asking my question. Would we, like, I mean, each project is a separate one. We wouldn't allow them to kind of come under one umbrella then?
No.
Okay. All right. Well, thank you very much, Madam Chair. Those are my questions. Appreciate the whole conversation though.
Thanks. Mayor Herron, do you have any questions?
Thank you, Chair Hansen, but I'm good. Most of my questions have been answered and I'm familiar with this, so thanks.
Great. I just had a couple of questions, and the guys really took most of my questions as well, but to be absolutely clear for those of us who are not planners and developers or in that industry, for every project where a letter of credit exists that will be put over to a surety bond, these are different surety companies. I think this is a little bit of a follow-up on Councillor McKay's question. We're not just dealing with one surety bond company. We are dealing with a number depending on the project. Is that correct?
Like the whole per project, it would go over to one specific surety company, just like we have for our letter of credit. We have specific banks. Well, it's not our bank specifically, but that project would pull all the funds from one bank, or put the funds in one bank. And in this case, for each project, they would put their funds with one surety bond company.
Okay.
So they wouldn't put pieces into different companies. I think it would become too costly for the developers to do that.
Okay, that's good to know. I want to say, John, I really appreciated attachment 3. That was a nice little summary of the wins and the way that you set out the chart, which you presented today. In terms of some of the other municipalities that are moving in this direction, Calgary, Edmonton, Grand Prairie, is this kind of a big city thing or a bigger city thing, or is this just a choice that a municipality has to do?
It's a choice that we have to do, but from discussions with everyone in general, not to say they're right, but the United States uses development bonds 99% of the time and everywhere. It's only slowly kind of making its way into Canada. And I do know, talking with some of my other municipality co-patriots, that some of them are looking towards doing this, and they're just not there yet. So we're trying to get ahead of the wave that's coming, in essence.
Oh, that's good. And across the country, I'm assuming, across our country.
That's right. I had a webinar with Vancouver doing it, slowly starting up as well. And then I think Toronto is starting it as well. So they are larger municipalities, but it's going to feed its way down, and everyone's going to be requiring to do this pretty soon.
And this is an opportunity for us to promote our Green 2.0,
That's
Green
correct.
Tech 2.0 as well. I mean, we can sort of tout that as a progressive procedure in our municipality. Okay, well, thank you for that. If there are no more questions, I wonder if Ledge Services could, oh, Councillor McKay, I was going to say your hand hasn't been taken down, but you have another question.
Yeah, I apologize. Yeah, I did. I just to follow up to your question, Jonathan. So, I mean, if this is such a great thing, I was going to say cat's meow, but that would really be aging myself. Why now? Like, what's the draw now? Is it just been something that's just new, that's just been that surety companies have looked at, or have they been pushing this for some time, and developers been pushing this for some time? But so why is Edmonton and Vancouver and Calgary and Lethbridge starting to look at it now? Like,
I think it was because the wording that was originally used and the stigma with surety companies, because previously it was that the thought was that it would be impossible to get those funds out of a surety bond company, just because of the legal hurdles that you would have to get to prove that you had that you needed the funds for a specific item. And now that they've rewritten their rules and they've written it in a way that's more favorable to the city, it becomes more of an option for all parties to use.
so I know with banks, they're under, we're protected if there's some protection. What's our protection under surety companies? Are they, I mean, you talked about it, if they defaulted, what legislative or certification requirements, what are they having to pay into insurance, or how are we protected if that happens?
Let's say we have a project that's ongoing and the surety bond company goes out of business, whatever might happen. At that point in time, we would request from the developer to re-establish a new surety bond with an A- rated company again.
Okay.
So that alleviates the risk there. Like I said in the presentation, the only situation where there's a big risk to the city is if the surety company goes down as well as the developer at the exact same time, which is not probably unheard of, but it's very low risk for that to happen. And I'm just gonna say a story from what I heard from one of the other municipalities is one of their banks went down that they had their letter of credit with, and that situation, they didn't have any cash available and didn't get reimbursed for certain situations when the developer defaulted after that. So it can happen with banks still too.
Yeah, probably more likely in the United States, but I was just wondering, I mean, there must be some protection. I know in Canada, there are rules and regulations around banks and bank operations, but I was wondering if surety companies are under some sense of oversight as well.
I'm not aware of that, but there might be, but I personally don't know that much in surety companies.
Okay.
If I may jump in, Madam Chair, they are surety companies, like insurance companies, like banks, are subject to their own legislation. And there's a fairly strict set of tests, liquidity tests, stress tests that surety companies go through. And that's how they get their ratings. And so this is one of the reasons why, certainly from my perspective, yes, is it a little tiny bit more risky than a letter of an irrevocable letter of credit from a chartered bank? Yes, but not much more, because surety companies are very tightly regulated as to their financial soundness. So we're pretty confident.
All right, thank you very much. I figured we would, but I thought we should ask the question.
So John, at the end of the day, we are freeing up capital cash for the developer so that they can use that cash to develop more if they choose to do so. So that's a positive. In your attachment 3, you talk about mirroring Edmonton. So
Yeah.
this is going to be a 5-year pilot. Is that the idea?
I didn't put it as a 5-year pilot because I don't want us to stick with 5 years in case after 2 years it doesn't work out properly. I want it to be able to just pull the plug right away. By saying it's a pilot, I feel like you almost have to let it run its course. But in reality, every development takes about 5 years from start to finish to complete. So it will be kind of difficult to put it as a pilot. And I didn't really want to put that language in here because if it does go ahead like we think it will, then there's no reason to pull it. But if it does start going south, then we can pull it immediately if we need to.
Okay, well, that's good to know. I guess there would be a point in time where the council of the day, whoever that may be, will want to know how this is working out. And I assumed at some point in time, administration will come back and say, this was a good move for these reasons. So I guess I put that out there as not a motion, but that would probably be a good thing to do. So I am looking around to my committee members to see if anybody wants to put forward these 3 recommendations. Mayor Herron.
Thank you. So I will move, or sorry, Councillor or Chair Hansen, were you suggesting that we also have a motion in there about a review?
I think it'd be not a bad idea. What do you think?
See where it could go.
Maybe just number 4, that council be provided a review in 2 years' time or at the end Q2 where are we, 2022? Or whatever.
John or Kevin have an appropriate, how long do you think it'll be to get a really good feel if this is the appropriate move?
I think it would be, honestly, it would probably be about 3 or 4 years out, just because the fact of the timing of duration. Because right now we could have some converted over, but start to finish, we'd like to see it happen. And I would mean the development starting next year would be the ones that would be first starting to use this from the start. And then all the way up until at least CCC, maybe FAC, which is when their construction is complete. So that usually takes 2 to 3 years for their roadworks and things like that. So we might as well have it at that point in time. Then we can see when the releases are actually happening.
Q4 of 2024?
Yeah, I'm just, David, all our council policies are reviewed on a certain schedule. And I'm just looking at CP&E 03 development security, the policy. Does it, what do we do for, how often do we review these things?
It's not entirely uniform, but it's typically
Okay.
either a 3 or 4 year review period for most policies.
And it's not, doesn't say in the policy, does it?
It often does. I don't think it does in this one though.
No, I didn't see it. Okay. All right, I'll make it as a separate motion then.
Perfect.
All right. Okay, so let me read what I got here. That revised council policy CP&E 03 development security provided as attachment 1 be approved. Oh, this is recommend to council. Be approved. Number 2, that revised council policy CIO 01 chief administrative officer delegations provided as attachment 2 be approved. And that the following council motion C95 2016 be rescinded. And that reads that the development agreements provided as attachments 1 and 2 to the February 22nd, 2016 agenda report entitled Standard Development Agreement Template Final Engagement Feedback be approved for use as the city's new standard for form development agreements. And ledge, I'll throw in number 4, that council policy CP&E 03 development security be reviewed in 2 years' time. Be reviewed by council in 2 years' time.
Or maybe an update. You think review or provided an update?
Either way, I think it's the same.
It amounts to the same thing, I think.
Yeah. Did Ledge get that?
Yes, it is.
Okay, awesome.
Thank you, Mayor. Any opening, I'll accept that. Any opening remarks?
No, I just think honestly, it's nice to see that St. Albert's getting ahead of this game. that, you know, it was not just a request of the development industry, that the city was already considering it. And this council has instructed our city manager to do everything we can to become competitive in the region. And this is just another way that we can become that more competitive and desirable place to invest. That's all I have.
Anyone else? Councillor Mackay or Councillor Broadhead?
Wes has got his hand up.
Does he? I can't see him. You're supposed to, okay. And you're at the participant list. Councillor Broadhead, please go ahead.
Thanks. Well, not much to add. Certainly, I just wanted to also echo the mayor's comments about one of the things that we as a council want to do is to make sure we create an environment within our community for all of our businesses to flourish. And I think this is a progressive step, and we're seeing it not only in the larger cities, but it's moving across the nation. And I think St. Albert is well positioned by adopting such a policy as this. I think the mitigated risk by the bond is sufficient to the needs of the city. And I'm looking forward to our development companies coming to St. Albert and to be successful here. So.
Thank you for that. And I will just echo much of what has been said. I appreciate the agenda report and everything in it. I also appreciate the fact that you're working collaboratively so well with UDI and developers, because honestly, development is a tough thing, and it's best when we can collaborate on things that work. So it's good for our city. It's good for our green 2.0, whatever we call it. What do we call it? Green tape 2.0. So happy to see that moving along. So we have little buttons at the bottom. I'm going to call for the question, and you can put a yes or a no, because I can't see you all together. So please register your votes. I think everybody's in. That is unanimous. So thanks for that. This was a short meeting. We're adjourned. You're muted, Wes.
Bye, everyone.
Bye, everyone.
Bye, everybody.